What's going on, everyone? Today is October 30th, Wednesday. It was Fed meeting day. Fed cut rates by 0.25%. So does that mean mortgage rates went down 0.25%? No, it doesn't. It never does. If you've watched these videos in the past, you know that the Fed meeting has really no correlation to mortgage rates. Now, what we hope for is a big reaction, but as always, we expected the Fed to cut rates by 0.25%. So if something's expected in the market, it's already built into it. So we knew it was coming, so we kind of already anticipated it. So as always, let's jump in. We'll take a look at the 10-year US Treasury, because you should all be following that on your stock app by now if you want to know what's going on with mortgage rates. Let's jump at the data, take a peek at what happened as a result of today's meeting. Okay, so here we are, 10-year US Treasury as always. Now for a quick refresher course, when we're looking at this, the 10-year Treasury goes up, mortgage rates go up. And so this was the first in September 4th, basically. This line right here was the fastest rates rose in a week in about 7 years. And then look what happened. We hit the ceiling here and rates slowly came down. So in 1 week, they went up dramatically. And then over the course of, what is that, about 2 weeks, 2.5 weeks, they came down. And then we hit a floor and they went back up. And then they hit this line right here, which I love, because going into the Fed meeting, as always, we hit kind of a flat line or a plateau. And this is what we always see going to the meeting because we don't know what to expect. So the markets hit kind of like a standstill. In anticipation of the meeting, rates went up even further. Now, yesterday, it mellowed out because we're getting ready for the meeting. And here's today's meeting. So red down is good. So when we look at this, the Fed meeting had an impact on rates of like 5 basis points. This is only 5 basis points. This doesn't do anything to interest rates in any way. So to me, this is basically like nothing happened at all. It did not improve us from where we were over the last, basically 7 calendar days, 8 calendar days, whatever that is. So it didn't have a huge impact. So what does this mean? We look at these charts and we go, dang, interest rates have gone up quite a bit. But if we go back and look back just 2 years, this is what I call perspective. When we're looking at this, here is the 10-year interest rates. We're basically at the lowest levels we've been in the last 2 years. And if we go back even further, we'll look at 3 years. Okay, 3 years, we're the lowest we've ever been. So right here is today, this line right here, we're right back to where we were 3 years ago. So perspective, you guys, when we're looking at what's going on with interest rates, human nature is to focus on the negatives, and we have very short-term visions. So when we looked at that chart and we saw the bigger spikes over the last 3 months, it's like, oh my gosh, rates have gone up so much. But if we look back 2 years, 3 years, we're still at the best levels we've ever been. So if you're buying a house right now, you're getting the best interest rates basically in history. If you're refinancing, it's the best time to do it. We said that in the last video as well. You really can't lose right now. What we're hoping happens if we do go into a recession next year is that rates go down even lower. My opinion is, why would you wait for something that you're not sure is going to happen? So if you refinance right now and then rates go down even further, then we just refinance again. If you're buying a home today and rates go down, you refinance for the first time. You can always take advantage of the market. What we don't want to do is wait. If I wait, hoping something better happens next year and I'm wrong, then I missed a great opportunity in either direction to purchase a home, because an interest rate equates to cost of money. So if you're doing something over 30 years, you want to get the lowest interest rate you can. So this is the best time to do it. Best time we've seen in the last 3 years, we've seen these rates in 2012, 2016, and 2019. That's it. If you have questions, comments, concerns, call me, email me, text me anytime. Feel free to leave a comment right below. I love having conversations around this stuff. I love making sure you guys understand how it all works. So let me know how I can help. Thank you so much, and I'll talk to you soon. Cheers.